degree is judgmental call. Some of the obligations are incredibly difficult to guarantee to compliance with. Combined with the penalty and legal impact, this has a number of industry members worried. In general, compliance programs are based on risk-based approach, but in the case of sanctions, risk-based sanction program is not a guarantee of success. Every sanction breach, no matter how small, remains a possible violation of law. In most countries, whether the violation will trigger a regulatory fine or worse is left to the discretion of law enforcement agencies. Increase in hiring and training cost, less efficient transaction processing because of the multiple scrubbing are some of the other areas of concern in regards to the implementation of sanction regimes in financial institutions. Although sanctions can affect almost any industry, financial services is a particular focus for regulators. Getting it wrong can be costly. Financial entities are assigned one or more of the three specific requirements: duty to determine, duty to freeze, and duty to disclose. Non-compliance with sanction legislation can result in significant fines and forfeiture of assets, imprisonment of the offending entity and individuals, in the worst case scenario, forced close down of the business. Violation of sanctions regime in most situations is treated as a criminal offense with potential severe penalties and maximum term of imprisonment for individuals. Directors, managers, or senior personnel can also be personally liable if a corporate body is guilty of a breach which can be shown to have been committed with their consent, involvement, or negligence. In 2009, corporate Mabey & Johnson pleaded guilty of breaching sanctions in Iraq and was fined over £3.5 million. More recently, members of the Royal Bank of Scotland Group were fined £5.6 million for failing to have systems and controls to prevent breaches of UK financial sanctions. In January 2009, Lloyds TSB agreed to a forfeiture of assets valued US $350 million to cover violation of certain US sanctions against Iran and Sudan. More and more financial industries are now growing international. There is no geographical boundary for client acceptance. Keeping in mind international laws can impact regional financial industry, global pre-screening and international checks on prospective clients, as well as regular screening for existing clients against international sanctions and watch lists are required to mitigate regulatory risk. Above mentioned are the government agencies, lists of sanctioned countries, specially designated national list, most wanted terrorist list, crime alert list, the World Bank's listing of ineligible firms consisting of firms or individuals who are ineligible to be awarded a bank-financed contract, the Interpol's most wanted list including persons wanted by national jurisdictions or the other international criminal tribunals where appropriate. The United Nations (UN) is an international organization whose stated aims are facilitating cooperation in international laws, international security, economic development, social progress, human rights, and achievement of world peace. The United Nations Security Council (UNSC) is one of the principal organs of the United Nations and is charged with the maintenance of international peace and security. Its powers, outlined in the United Nations Charter, includes establishment of peacekeeping operations, establishment of mandatory international sanctions, and the authorization of military actions. Its powers are exercised through United Nations Security Council resolutions. The Council has resorted to mandatory sanctions as an enforcement tool where peace has been threatened and diplomatic efforts have failed. The range of sanctions has included comprehensive economic and trade sanctions and/or more targeted measures such as arms embargoes, travel bans, financial or diplomatic restrictions. Countries under UN sanctions currently are Afghanistan, Democratic Republic of Congo, Democratic Republic of Korea, Iran, Iraq, Lebanon, Liberia, Sierra Leone, Somalia, Sudan. The European Union, shortly known as EU, is an economic and political union of 27 member states which are located primarily in Europe. Sanctions or restrictive measures, the two terms used interchangeably, have been frequently imposed by EU in recent years, either as an autonomous EU basis or implementing binding resolutions of Security Council of United Nations. Restrictive measures imposed by EU may target governments of third countries, non-state entities and individuals such as terrorist groups or terrorists. They may comprise arms embargo, other specific or general trade restrictions like import-export bans, financial restrictions, restrictions on admission, visa or travel bans, or other measures as appropriate. The EU regulations can prescribe that certain duties must be undertaken by special competent authorities in each member country. Other measures fall under the competence of member states, such as arm embargoes, and are implemented via national legislation. The EU sanction list includes Al-Qaeda, Osama bin Laden and Taliban, Belarus, Burma, China, Democratic Republic of Congo, Croatia, Egypt, Haiti, Iran, Iraq, Ivory Coast, Democratic Republic of Korea, Lebanon, Liberia, Libya, Myanmar, North Korea, Serbia, Somalia, Sudan, Syria, terrorist groups, foreign terrorist organizations, Republic of Geneva, Tunisia, Yugoslavia, and Zimbabwe. Thank you for your visit to this presentation. In this, we touched base on geographical risk, FATF's Recommendation 21, definition of sanction and different types of sanctions, sanction compliance, challenges faced by a financial institution, other watch lists for higher risk customers, consequences of non-compliance, UN and EU sanctions. Knowing the high-risk areas of money laundering and terrorist financing is a prime function of AML compliance. I am trying to bring to you current related topics in each session. I am looking forward to bring to you the topic of human trafficking in my next session. Till then, goodbye.